General risk disclosure. Trading financial instruments, including forex, futures, equities, commodities, and cryptocurrencies, involves significant risk of loss. Trading is not suitable for all investors, as it may result in the loss of your entire investment. Leverage, volatility, and liquidity risks are inherent in these markets. Before engaging in trading, carefully consider your financial situation, experience level, and risk tolerance. You should only invest money you can afford to lose. Forex and futures disclaimer. Trading in the forex and futures markets is highly speculative and carries a substantial risk of loss. The leverage nature of these instruments amplifies gains and losses, potentially leading to substantial financial exposure. This content complies with CFTC Rule 4.41. CFTC Rule 4.41 disclaimer. Hypothetical or simulated performance results have certain inherent limitations. Unlike an actual performance record, simulated results do not represent actual trading. Also, since the trades have not been executed, the results may have under or overcompensated for the impact, if any, of certain market factors, such as lack of liquidity. Simulated trading programs are also subject to the fact that they are designed with the benefit of hindsight. No representation is being made that any account will or is likely to achieve profits or losses similar to those shown. Equities and commodities disclaimer. Equity and commodity trading involves risks associated with market volatility, company-specific factors, and geopolitical events. While stocks and commodities may have a lower leverage factor compared to forex or futures, they can still result in substantial financial losses. Cryptocurrency disclaimer. Cryptocurrencies are speculative and highly volatile instruments. Trading cryptocurrencies involves additional risks, including regulatory uncertainties, security vulnerabilities, and lack of liquidity. Cryptocurrencies are not regulated by most governments or central banks, and their value may be affected by external factors such as news events and market sentiment. Regulatory references. In the United States, this content adheres to the regulatory standards of the Commodity Futures Trading Commission, National Futures Association, and Securities and Exchange Commission. In the European Union, trading practices comply with the European Securities and Markets Authority standards. Global compliance, content aligns with internationally accepted guidelines, but laws vary by jurisdiction. Consult with a licensed professional in your area. Past performance disclaimer. Past performance is not indicative of future results. Any historical results or performance shown in this content are for informational purposes only and do not guarantee future performance. Educational content disclaimer. The information provided in this video is for educational and informational purposes only. It is not intended as investment advice, nor should it be construed as a recommendation to buy, sell, or hold any financial instrument. Always consult with a licensed financial advisor or regulatory authority in your jurisdiction before engaging in trading activities.
Okay. Seven, 29, 25. NFP week still. News tomorrow. Okay. Let me get this. Boom. All right. Boom. We're kicking it off. 8:15. 8:15 a.m. ADP. Non-farm. Employment change. Then 8:30. 10. 2 p.m. 2:30. Okay. So wait till press conference. And or take the day off. Wait until or take the day off. Or take the day off. This could set us up for a buy. It's a new all-time high. If price digs deep enough into discount. Now, this could set us up for a really big sale. You got to do both sides. Sell. high impact news like FOMC statement. Could drop us. You never know. Now, based on what has been happening lately, everything's bullish. And news is just good enough to keep sentiment high. Trade deals coming in from left and right has the greed index high. Fear and greed. Looks like it's going down though. When others are greedy, be fearful. Warren Buffett. This is going down though. A week ago we was at 73. A month ago we was at 64. A month ago we was pushing up too. Yeah. All right, so here Fed fund rate for tomorrow we probably had 100%. CNN be trying to make you sign up for pay for stuff. The only thing good CNN got is the fear and greed index. See, look, 97. This is unchanged. All right, data today has sentiment unchanged. Data today has sentiment unchanged, and at this rate, they might not cut rates in September. By the end of this week, I want to see 75% and higher for rate cut to play accordingly with the we are going to get rate cut narrative. Yeah. Earnings. Ooh. Big dogs tomorrow at market close. Oh, we can go really, really, really high. This is going to generate. This is going to be a lot of liquidity. If you're on the wrong side and you position heavy with this amount of news, you can lose. Microsoft and Meta, which is Facebook. I know you want to capitalize those. If you go do all the work to start a business and do all that stuff, capitalize my stuff too. You know, shit. report after market close tomorrow. This can push us either way as well. I'm expecting a big day. Tomorrow. But I also never underestimate NASDAQ ability to sit there and chop you for days on end. Not just going in like, all right, it has to happen. I'm going in like, all right, if it happens, I'm gonna be ready. Because NASDAQ will be like, all right, we'll do it next month. We'll get there, but you be sitting there on top step like, it's gonna happen. No, it's not. Not today. Tomorrow. Let's go higher. I'm here for it. Okay. Just sitting in my hands, waiting for the end of the retracement. To stock buys and correlating assets. Or inverse correlating assets. Just into my hands waiting for the end of retracement to stock buys on inverse correlating assets. I guess that, yeah, okay. I don't know. This is done. No more. Sometimes I be thinking about deleting all my lines, but it's been a year. We still have this here. Let's not forget. And that's what happens. That's why you don't delete lines. Look at that. That line is still important. NASDAQ remembers that line. Took Monday's high and took Monday's low, created a bearish Dylan range. Let's go to the weekly. Okay. I think that's it for the week. Could this be high of the week? Tuesday high of the week, maybe? This is kind of looking like Tuesday high of the week. Sales might be on the menu. This is kind of looking like Tuesday high of the week. Sales could be on the menu based off structure alone. Mm, the news, however, is the what you want to say catalyst that we have to watch out for. Earnings, Fed fund rate, employment data, GDP. I don't think nobody cares about. I don't even think Powell cares about that. GDP is it's important still, but look at this. Just these two daily candles, two up days but down days. So we hit my old daily high where I wanted to buy from. Just the way this candle delivered. Mm, it is a reversal candle because we took the high and then took the low. This retracement. We should be able to sell the next candle. And we should be able to target this. This is just structure. The only thing I don't like about this is it's really, really, really tacky. But are we closing below lows? No. Could this be internal range liquidity sweep to go higher? Yes. No. I don't have a clear draw. No clear draw. We gotta do one. We gotta do one thing though. This is my one thing. Shout out to ICT. But he used to always do the gun to my head if I have to pick something. Like I don't want to pick. It's 50-50. We shouldn't trade. But if I had to pick, I would pick this. It makes the most sense. This could just be a retracement. We really not expanding. This is the first body above. The wick of that level kind of does make sense though. This is 50-50. But if I had to pick, I would bet on sales. Textbook, Tuesday high of the week. Scenario. I would target Friday's low. I believe that's Friday's low. What's this? Yep, it's Friday's low. Hold on, wait. H4 looks like it too. This is the deciding candle here. Nice and simple. Let's make this super red. And we make a little line white. See if that's hard. It's kind of hard. Yeah, that'll work. Put this as a red line. And this will be the retracement to the order block. Current only. Current low. Add alert. H4. H4 bearish order block. Text. H4 bearish order block. Bottom. Yeah, that would be the setup. This is, Yeah, that's equilibrium. Yeah, that's kind of clean. I wanted this to stick out as far as the colors, but the maybe if I do it like this, border on it, see if that's hard. I mean, that's a little bit harder. Yeah, that's a little bit harder. Ideally, hold on, wait, because also let's see if there's a fair value gap here, and there is. There's a gap here. So above here, yeah, really above here. I'll make this a solid line. Above here would be cool. Let's see what this looks like down here. There's a gap right here. This is the best possible price. Look at this. Nice little gap right here. Current going below. Current going below. Yep, that's the plan. From here to here, I'll put risk on. Will I hold it to infinity? Maybe if it's like a runner or something. But as far as like telegraphing the crash or telegraphing the top, I can't do it. Not yet. I'm still learning. All right, so I'm thinking we trace to H4, bearish OB and sell off. That's the plan. And alerts are set. Did we break something too? Yeah, we broke this one. What's this? Monday's low? Yeah. No, pick a different color. It's too much like white. Yeah, we'll go that one. Monday low. I never noticed how we kind of just stayed here too. Retrace up to here. Alert set here. This is the ideal play. Let's make this blue and put some text in it. H1 fair value gap. It might happen in London too. All right, so that's the idea. Selling retracements, targeting Friday's low. Here first, maybe buy after. But that's the trade idea based off of where we're at right now. I like how the H1 fair value gap um, fits inside the H4 bearish order block. I would love to sell from here to target Friday's low. Alert set and H4 minus order block. All right. All right, that's that on that. Y'all have a good day. Peace.